How do I know how much money should be withheld from my check for taxes? How do I know if OPM is withholding the correct amount? How do taxes even work? What happens if I pull money out of my TSP? How much do I owe in taxes? Stick around. I'm going to try to explain all of that complicated stuff in very plain language. Welcome back to the channel, Furzonians. I'm Chris Barfield, barfieldfinancial.com. I'm a CPA, FURS expert, and just a chill guy. Today we're going to be talking about taxes. Boring, complicated, painful subject, but I'm going to try to make it as simple as possible. I get a lot of questions on taxes. There's going to be a whole universe of information we don't talk about today, but I'm going to give you a rough idea so that you can look at your paycheck in retirement or while you're working and say, yeah, enough money is coming out, or no, I'm going to be in deep trouble when I fill out my taxes. That's what we're talking about here today. And I'm sure by the end, you'll all know more than you know now. So stick around. The taxes in the United States, how they work is we have what's called a progressive tax system. We move up through tax brackets. Progressively, we pay more income the more money that we make. However, the biggest misconception, the misunderstanding that I see out there is that people think that if you're in the 22% tax bracket, that you owe 22% on all of the income that you make. That's not true. That's incorrect. It's more complicated than that. And be thankful that it's more complicated than that because it works in our favor. I think the best way to illustrate this is just walking through a scenario. Just walk through an example, and I think the best way to illustrate this is just to walk through a simple example. As has become my custom, I have created a PowerPoint here to help illustrate what we're talking about. Tax brackets. Let's give it a little example here that says that you're retired and you're making $70,000 from your FURS annuity and your supplement together. This is just a gross rough estimate of what you're going to be making this year. Let's say that your spouse is still working. They're not as lucky as you to have retired, so they're making $100,000. Or, maybe you're making $100,000 in addition to your pension and your spouse not working. Whatever. You can change these numbers to make them applicable to you and your situation. Let's just follow along with two people working. Together, they are grossing $170,000. This is their total annual income, or what sometimes we would say gross annual income. This is not necessarily taxable income. That's a different thing, but this is just what their gross income is for the year. Most of us have a rough idea how much we make per year. If you're still working for the government, you can just go look on the OPM tables and see what you make. Or you can just take your leave and earnings statement that you get every pay period and multiply it by 26, and that'll give you your annual income. And same thing with your spouse. If you're married, you can put those together. So we're just saying in this simple example, we have a retiree and a spouse. Together, they make $170,000 of gross income. Fortunately for us, the IRS does not make us pay taxes on our gross income. They have something called a standard deduction. That is a different amount, which I'll show you on a chart in just a second for each category of person. In 2024, if you are married filing jointly, it was $29,000, or it is $29,200. What that means is you can deduct that just automatically off of your gross income. So $170,000 of gross income minus the standard deduction of $29,200 gives you a taxable income. This is key. Taxable income of $140,000. So while you made $170,000, you're not paying taxes on $170,000. You only have to pay taxes on $140,000. Some of you may take an itemized list of deductions. We're not talking about that. This is a simplified version. We're just taking the standard deduction. So your taxable income is $140,000. Okay, so what do we do with that information? $140,000. Well, now we go to what is called the tax brackets. A lot of people know about tax brackets, but don't fully understand them. A lot of people don't know what tax bracket they're in. All of you should know what tax bracket you're in for planning purposes. It's very important. So how do you know what tax bracket you're in? Where do you find this information? It's all over the internet. There's all a bunch of different places. You can go to the IRS. But as with most things, you can simply go to barfieldfinancial.com, go over to the resources page, click on resources. Each year, I produce a tax and retirement guide. So let's click on 2024. This has before we get into taxes, it has a bunch of just good information. What is the FERS raise for this year? The FERS COLA for the retirees. How much can you put in TSP? Depending on your age, HSA, IRAs, FSA, how much can you put in those? But when you come down here to the bottom, we have a whole section on taxes. Standard deduction for each year I list. For 2024, we've got single, head of household, married, filing jointly. So in our situation we're talking about, our example, this person is married, filing jointly, so they can deduct $29,200. Now here are the tax brackets. We have in this country currently, right now, these tax brackets: 10, 12, 22, 24, 32, 35, and 37. Those are the only tax brackets that we have. We don't have anything higher than 37 currently. After World War II, it was almost, I think, in the low 90s, and in as late as I think early 1980s, before Reagan was able to get the tax code changed, it was up in the low 70s, I believe. Okay, so right now the highest tax bracket we have is 37. So what do we do with this information? Well, in our scenario, our example, this guy and this married couple makes $140,000 a year of taxable income. So let's come over here to the chart. They're married, filing jointly. If you're single, you're going to use this chart. If you're head of household, so you're not married but you have dependents, you would use this. You're married, filing jointly, then you would use this chart. So they are making $140,000. Where does that fall? That falls right here between 94 and 201. So if we follow that over, they are in the 22% tax bracket. Does that mean that all of their income gets taxed at 22%? No, we already said that's not true. So how does it work then? Well, the first $23,000 that they make gets taxed at 10%. So that's good. Not everything is taxed at 22. The first 10 or the first 23 is taxed at 10. After that, 12%, the next range, 23,000 to 94,000, that's taxed at 12%. Then anything over 94,000 up to, in our case, 140,000 gets taxed at 22%. If they made 200,000 or 300,000, then they might have to start moving up here. But in our example, they end at 140,000, so 22% on that portion of income is what they have to pay. So let's go do that math. Calculating our taxes. The first $23,000 we said is taxed at 10%. So if you do that math, that's $2,300 basically in taxes. 23.2 times 10% is $23.20 in taxes. Set that amount aside. The next amount, because they are still making more than 23,000, from 23,000 up to 94,000, that's about $71,000 of income, is taxed at 12%, meaning they're going to owe $8,500 just on this amount. So they owe $2,300 on this amount, $8,500 on this amount. We still have to go, right? Because they make up to 140. So over 94.3 up to 140,000, which is roughly 46,000, they owe 22% on this amount, which equals a total of $10,000, $10,230. But that's, again, only on the portion that is above 94,000. So when we put all that together, 2,300, 8,500, 10 grand, they owe $21,000 in taxes. So they owe $21,000 on $140,000 of taxable income. They are in the 22% tax bracket. But did they have to pay 22% on all of their income? No, that's just the highest tax bracket that they're in. So how much did they have to pay overall? What was their, what we call, effective tax rate? Well, their effective tax rate was only about 15%. So that is the $21,000 of tax that they have to pay on the $140,000 of taxable income. You do that math, it's roughly 15%. So their effective tax rate is 15%. Or another way of saying it is they effectively owe 15%. Now, if we go with the theory that some people, or the understanding that some people have, is that you owe 22% on all of your income if you're in the 22% bracket, let's do that math. 140,000 times 22%, that would be about 31,000. So even though it's extremely complicated to break it down like this, it actually works in our favor because this person, this couple, only has to pay 21,000. If it was 22% on everything, they'd have to pay about 31,000. So that is a very simplified example of the amount of money that someone would owe, a couple would owe on this amount of income. But what do we do with that information? So what? How do we use that to help us? Well, if you know, let's go back to our example here. If you know that your annual income for the year is around 170,000, then that would mean that your taxable income is around 140,000, which would mean that you have to have approximately $21,000 withheld total for the year from your and your spouse's check. Then we know that $21,000 better come out of our checks for the year. So if we take $21,000, 21,081 divided by 12, we're looking at about $1,750. Let's call it $1,800 a month. So what that means is that about $1,800 has to be coming out of your combined checks every month for federal withholding taxes. It doesn't all have to come out of one check. It could be $900 and $900 coming out of each check, or it could be $1,400 coming out of one check and $400 coming out of the other, or however you want to do it, $1,000 and $800, whatever. But combined together, roughly $1,800 a month has to be being deducted for federal income tax every month. If you add your two withholding amounts together and it equals 1,000, and you know $1,800 should be coming out every month, well, then you know that you're going to owe quite a bit of money. So when you are looking at your OPM check, you do this example, plug your numbers in, figure out what tax bracket you're in with your income, maybe your spouse's income, maybe another job that you're working, maybe TSP money that you're pulling out. Whatever your gross income is, do the math and then figure out how much money is being withheld combined from all those sources. It does get a little complicated the more sources of income you have, but the total is still the same. It's not super hard math. It's just a matter of adding up all of your withholdings and adding up all of your income. It's really that simple. Ideally, you wouldn't be doing this. Ideally, what I tell all of my clients as I'm going through a consultation with them is that the middle of each year, June, July, I would like them to sit down with a CPA and let a CPA do a mid-year review, run the numbers and make sure that they're on track to not owe, 10 grand. If you added up all your numbers and you realize that you're on track to pay in 10,000 and you're going to owe 21,000, then that means you're going to have to come up with $11,000 at tax time. That may be uncomfortable. You may not want to do that. So ideally, again, you'd sit down with a CPA. If you don't want to do that and you want a rough idea, then you can follow this example. But please understand, this is not tax advice. What I'm advising you to do is to go talk to a professional who does this for a living. I'm a CPA, but I'm not your CPA. Okay, so none of this is tax advice. Okay, Chris, what about the TSP? I hear a lot of people say, well, if you're in the 22% bracket and you pull money out of TSP, you owe 22% on all of that income. I thought you said you have to move up progressively through the brackets. That's true. That's a really good question. So let's go look at it. If you're pulling money out of TSP, we are going to assume that you are also already making other money. You've got a pension or your job or a spouse or whatever. So you have already used up. Let's go back to our married couple here. They've already used up 140,000 of their tax brackets. They're up here in the 22% tax bracket. And now they start pulling money out of TSP. What happens then? Well, if they're pulling money out of TSP then, and they're already up here in this bracket, then every TSP withdrawal starts at least at 22%, right? And then if they're pulling out enough, they may have to start paying 24% on their TSP withdrawals, or maybe 32%. From time to time, people tell me that their plan in retirement is they've got $1 million in TSP and they've got, $300,000 mortgage left. And so they're saying, you know what, I'm just going to pull out $300,000 out of my TSP and pay the mortgage off because I just want to be done with the mortgage. I don't want any more payments. Well, that's fine. You can do that. But the issue is if you're pulling that from the traditional TSP, if you pull $300,000 at one time in 1 year, what's going to happen? Well, that's going to bump you up probably 2 to 3 tax brackets here. So you may not want to do that. That might not be the wisest move. It might be better to pull out, $60,000 a year for 5 years in a row, or whatever you and your CPA decide upon. But just understand that if you're already making money and then you start pulling TSP on top of it, that your TSP is never going to be taxed at 10% because you've already gone through the 10% bracket. You've gone through the 12 and you're in 22 or 24 or wherever you are. So any additional money is going to be at those higher brackets. Okay? By the way, TSP is only going to withhold, as a general rule, 20%. So if you're pulling out money and you're in the 24% and they're withholding 20%, then you're going to owe an additional 4%. So you need to account for that some way. Everything that we talked about so far has been 2024. What if you want to plan for 2025? Is there a way to do that? Of course there is. Go to barfieldfinancial.com. Go up to resources. I already have the 2025 tax and retirement guide up there. Everything is filled in. The only thing we don't know yet is the FERS raise. It looks like a 2% raise is likely for you that are still working. Although somebody last week did actually push for a 4.5%. It hasn't been finalized yet, so we'll see. But come down here and you will see the tax brackets. Same percentages. Those are scheduled to change in 2026, I believe, unless Trump extends the cuts. Standard deduction for married filing jointly this year is $30,000. Here are the tax brackets. So again, you can walk through our example, whatever you think that you're going to make in 2025, come up with your rough annual income, deduct the standard deduction, which would be $30,000. You would have your taxable income left. You go find that on the tax bracket. Then do the math that we did. You'll figure out how much that you will owe. Divide that by 12 to figure out how much you owe per month. And you'll see if you're on track to be good or not. All right. That's it, guys. Thanks for sticking with me through I know it's painful, boring subject. I'm sorry it's complicated because the government wrote it. If they would let me write it, it would be a lot less complicated. You could fill out your taxes every year on a 3x5 card. Everybody would pay 11% flat tax and everything would be simple. All right. So again, this is not tax advice. It's just hopefully helps you to understand the tax brackets and to be a little more familiar, not as intimidated with them, and to help you with a little bit with planning. Ideally, you want to go see a CPA. I know a lot of people won't do that. So this is the next best thing. At least have some type of idea, plan. Okay. Like, subscribe, put some comments down below, share this with other people. Let me know what you want to see in future videos. And you know what I'll do? One of the comments below, if I'll pick somebody out and I will send them a Barfield Financial, world famous Barfield Financial Yeti coffee mug, free of charge to them. I've got them in blue, white. I think I've got some red ones. So put a comment in there and I will pick somebody out. I know I got to bribe you guys to participate. You're government employees. I know, I get it. Check in on the channel every once in a while. I'll be putting out a new video soon. And until next time, feed your TSP.